All right. Oh. Let's get it. See what's going on here while we analyze. Ugh. All right, we're above the 200 on the hourly chart. Trying to hold that 200 as support. Got a lot of gaps to the bullish gaps. Potentially could hold as support. Coming up to a support level, taking out pre-market lows down here. So we'll see how this 5-minute range, a lot of support down here, so see how this 5-minute range kind of plays out after taking out that support. We got about a minute left. Got about a minute left until 5-minute range is set. I can pretty much start marking out that range. I think we'll pretty much have it set unless something crazy happens. But we took out pre-market lows, swept them. Now kind of ranging in the middle here. There's some support down here on higher time frame support, so something to pay attention to. But we also got view up there. All right. Not too big of a range today, but we'll see. Here, give me a second. I'll be back. All right. We got a lot of resistance up here. Also, here you have the view up. We got the 200. seeing what happens here. How does the 200 work? It just plots out the, it's like it's an EMA, so it's a moving average, and it plots out the past 200, like the average of the past 200 candles. So that's why you see it above price right now on a 1 minute chart, because it's obviously 200 candles on a 1 minute chart versus 200 candles on, say, an hourly chart. You can kind of see that they're at different areas because it's a different time frame, you know, different amount of candles, but it's 200 candles on any time frame, whatever time frame you are. So it works pretty well. I mean, you can kind of see how it works. It's not something I would use to take entries off of, but it's good to have just, I guess, as a gauge. I like to have it as a gauge. Same thing with like view op. We're below view op, so we're kind of in bearish territory. View op is right above that 200 right now. $9.18 and $9.18, then $9.40. Well, yeah, I mean, $9.18 is not that far away. So it's like, it's not that big of a move. Very possible we could even get there in the next 5 minutes, but so depending on, we'll see where price breaks out of. If it breaks out of the low or the high. Just chopping in this range so far. We've already swept out pre-market lows. Well, market been so buns recently. I don't know. It's, yeah, market has not, for me at least. I mean, I know some other people are gonna be like, you know, market conditions were so awesome, and for me, this month pretty much has not been. It's not been a horrible month, but I'm like hovering at like break even. I can't go on that run that I want to go on. All right, here we are breaking down. Breaking those lows after sweeping him one time, so we're about to close below. Let me see. Rejecting off that pivot. If you go to a 15-minute time frame, you could see we do have support down here, right? So also hourly chart, we're kind of breaking below that 200. That's not to say we can't pop back up. So we'll see what happens here. Here's that close below the range. Now the question is, do we continue to the downside and displace, or do we get a pop back up? We shall see. Oh, I forgot to check. Do we have news today? Oh, crap. Oh, that was at 8:30. All right. We had 8:30 news. Pending home sales. Not a big... So, we do have news at 8:30. Well, I mean, at 10 o'clock, but it's orange folder. Not too big of a deal. All right, pushing down to this pivot point. Seeing how price reacts off this pivot. Starting to displace. Uh-oh. Not good for the bulls. Not good for the bulls. Holy crap. Alright, we are just displacing lower. Well. What do you mean when you say pivot point? It's just it's an indicator, pivot point indicator. It just plots out pivot points. You see this. Here's a pivot point right here. And to the downside, there's one right there. There's another one down here. So I don't know how it plots them out, but a lot of times they do, you know, they do hold ups a lot of times. So again, I just use them as gauges in the market. If I'm in a trade and there's a pivot somewhere, or, you know, if I'm trying to long off a pivot, it's an extra confluence, or if I'm already long and there's a pivot up there, it's resistance, so I gotta be careful. We are just displacing lower. In that case, you look stressed to the point I'm stressed and haven't pulled anything. What the hell? How do I look stressed? What do you mean I look stressed? I'm not stressed at all. Holy crap, we're going lower. We are dropping. I mean, at this point, we're displacing below that 200. We do have support down here where this pivot point is. A lot of support down here. This last gap, it's about to fill that last imbalance down there. I mean, I'm pretty much... So basically kind of like gambling. I mean... Anytime you take a risk, it's considered a gamble. anytime you take a risk and you don't know the outcome for sure, it's considered a gamble. So this whole like people that say, oh, it's just gambling. Is starting a business, then starting a business is gambling too. Whether you start a business, I mean, if you don't want to take, gambles in life, you're never going to get anywhere. There are people who do true, like, they don't know what they're doing and they're just buying at random areas and hoping that price goes up. And there are people who actually have systems and rules and they know what they're looking for. They have proper risk management. So there's two different types of people in this. There's also people who start a business with no plan and kind of wing it and they fail. And there's people who start a business who have a plan, who have a business plan, who have rules set in place to keep their business profitable. So it goes ways, but the only difference is it takes hundreds of thousands of dollars to start a business. Trading, anybody can jump in with a few dollars in a prop firm account. So that's why the failure rate is so high, because nobody takes it seriously. Everyone treats it as some kind of game or something. I mean, you're gonna treat it that way and you're just gonna, by all means, but you're just gonna keep losing money over and over and over again and never make money. You'll make money here and there. The market will, rewards bad behavior every once in a while, but you're not gonna keep it. It'll let you hold it for a minute. $13.30 in my practice. Nice. Yeah, this thing's displacing lower for, let me tell you, this month has been like an amazing month for breakout traders. If you're a breakout trader, holy crap, this month has been like amazing. We've had so many times where price just broke out of this 5-minute range and just ripped to one direction. See, last month was good for kind of my setup. This month, not so much. To me, trading is, with analytics, it's different from other kinds of games. Yeah, I mean, you're taking, if you have a plan, I mean, you're taking very calculated risks. That's the thing with trading. It's like, I know, like for me, I know exactly how much I'm risking per trade. I'm entering the trade. I have a plan. There's a reason I entered the trade. I don't just enter blindly. The reason I entered, because I'm entering on something I've already back tested and proven that it works. So it's like I have a specific plan. Everything I do in trading, there's a plan behind it. From where I put my stop loss, from where I put my take profit, from where I exit, to the amount of trades that I take per day, to everything I do in trading, there's a system and plan behind it. I'm not doing something just cause. Like, everything was pre-planned out. So it's, But people say, oh, trading is gambling, thinking that I'm gonna like flip. Hey, no, it's not gambling. It's not. No, it's not. Anytime you take a risk with like undetermined anytime you take a risk and you don't know the outcome for sure, it's considered a gamble. You don't know. Any business you see, go outside, and any business you see, that owner took a gamble because he had no idea if the business was going to be profitable, if the business was going to flop. Nobody knows for sure. Any business, nobody knows 100% whether they're going to be successful in it. You can open the best business ever, and for some reason, there's certain areas, I'm sure you've seen it before, there's certain locations in business where no business really lasts. Business just kind of come and go in that area. So it's like you never know 100%. So that's considered, any business you see is considered they took a gamble. That's gambling too. There's a high failure rate for people starting businesses and them lasting. Look at the restaurant business. Look at the failure rate for businesses to last 5 years. And then tell me. So the thing about it is you have to have a plan. Never take a trade unless you've back tested it, unless you know the risk you're taking. That's it. And I, for example, I even have systems in place. If I take 3 losses in a row, I size down, half size until I make back a full size loss. Like, I have very specific systems in place to keep me in the game, so that I wouldn't go on tilt, so I would stick to my rules and stay in the game. Because every single strategy is going to go through drawdown at some point, right? That's the key. Every strategy, you go through drawdown and you go through those streaks where you make money, right? Every strategy, you go through those streaks where you feel like you're on top of the world, where you're having the best month. I mean, you're hitting trade after trade after trade after trade. You're just making money every trade. And that's the key to trading. You got to protect yourself on the months that are very slow, that you're going to maybe have a little bit of drawdown. You know, you kind of play defense, and then you're all you are is waiting for that moment to where your strategy is going to be good, right? Then your strategy, there could be a month where your strategy starts working good, and that's when you step on it and you make back and you start going on a ripper. So you put that's trading. But this whole, like, if you have a misconception of trading where every month is going to be necessarily profitable, or every month is going to be a really good trading, that's not true. You're going to have losing weeks. You're going to have losing months. That's just part of trading. That's just the business of it. If you want something like steady and you think you're just going to come in and I'm going to make, $1,000 every day, and then I multiply that by 20 days, man, okay, I can make, that's not how trading works. The people who make the most money in trading are the most patient people in trading. That's the people who make the most money. It's not the people who are clicking buttons left and right and thinking that them clicking buttons is a sign of, like, progress, or like. All right, we bounced off. Now, here's the thing. You look back. Right? Now you see on the 1 minute chart, we bounced right there. If you go on a higher time frame, I'm sure you'll see why we bounced there. Oh, okay. Yeah, makes exact sense why we bounced there. And this is kind of, good to know, so that just in case next time you're in a short or something, right? It filled this last gap. You see this last gap down here? Filled that last gap, and we have a lot of support down here. Why? Because previous resistance becomes new support. So price came back down, tested this new support level, filled that gap, and now we're starting to rip back to the upside. So now on a higher time frame, this is why it's important to see on higher time frames why we had support there. Makes sense, right? When you look on a higher time frame. When you look on a 1 minute chart, you don't really know why we bounced there. It's like, okay, we bounced, so I don't know why. But when you look on a higher time frame, you see exactly why we bounced there. How you been? I've been pretty good. Yeah, I trade MNQs. I don't trade Nasdaq. I don't trade the E-minis. I trade the micros just because of sizing, especially with volatile markets. I mean, it's just, I size according. So here's the thing. I don't get this like fixed sizing that people do. It makes no sense. You have to have, in terms of your position size, you have to have a fixed size that you risk per trade. But in terms of contracts, you have to adjust your contract size based on how much you want to risk per trade. So that's why it's like some moves you may need a big stop loss because you have a lot of volatility. So if you need a big stop loss, you have to size down contracts. So if I want to risk $400 per trade, some setups, right? I only need one micro to be risking $400 per trade for my stop to be at a certain area of invalidation. Sometimes I need 5 micros for my stop because it's tighter, so I need 5 micros for my stop to be an area of invalidation to be risking 400. So it's dynamic risk. With just straight E-minis, I can't do that. But with micros, I can really do that adjustment in risk based on how much I want to risk per trade. And you have to always put your stop losses at areas of invalidation. You don't put your stop loss in the middle of some kind of range just because you're trading E-minis and you only want to risk $400 per trade. So in order for that, I have to put my stop loss right there. And you just keep getting stopped out because you're putting your stop. You got to let the market breathe. That's the thing. You have to, when you get a setup, you have to let the market breathe and do its thing to go to your TP. If you're putting your stop too tight, people think, oh, if I have a super tight stop, it's better. It's not necessarily better to have a tight stop, because having a tight stop, you could wick yourself out before the trade even, you know, works out. How much you risk per trade? I do 250 no matter what until I get more accounts. So I risk more per trade on my funded $50,000 accounts, but I have dynamic risk sizing, meaning I risk $400 per trade, but if I take 3 straight losses in a row, I half size. I drop down to half size until I make back 1 full size loss half sized. So then when I size up, hypothetically, if I take that loss again, I size back down. If that's a winner, I stay kind of sized up and kind of go from there. So the goal of that is I can risk more, but I can also, when I go on runners, my runners are exponentially growing my account. But my losers, I'm half sizing, so I'm kind of like, I'm not going on a crazy losing, you know. I'm protecting myself on the downside. But I can do that because, you know, I typically, so far, I haven't taken more than 2 losses in a row. This is about, honestly, I'm at 2 losses right now this month. So if I take 1 more loss, I'm going to have to half size. So this is kind of like 1 more trade, and if it's a loss, I have to half size until I make back to be able to size back up. Hopefully that doesn't happen because, like, I really don't want to half size, but I got to protect myself at the same time. But yeah, this month has been it's not been good for, I've been kind of hovering at break even, and I'm down a little bit. Like on my Apex accounts, I'm down like 1 trade away from break even. So it's not like I'm down crazy amount, but it still sucks to be down. Like if I have 1 more trade, it'll put me at break even this month. So it's like, it's been a tough month for me. I've been just kind of playing defense. I'm hoping maybe December is going to be better for me. Hopefully. I know December is going to be shorter just because of like holidays and stuff like that, but I'm hoping December gives me some good setups. I like to trade the 5-minute or the 1 hour. Yeah, it's good to go on higher time frames. There's less noise in higher time frames. You can see better, you know. What's your RR? 1-to-1. I'm a base hit. 1-to-1. Sometimes it is lower than a 1-to-1. Sometimes better than a 1-to-1. Just depends on the market structure and where I think I could take profits. That's where for me, that's where the intuition kind of comes in. Like my strategy is pretty much 80%, like 80 to, I would even say 90% systematic. And then there's that small percentage where there's a level of intuition of where I take profit. If I'm below VWAP, pushing into VWAP, I'll probably take profits a little earlier. If, you know, I'm taking along off of VWAP, I'll maybe hold those runners a little bit higher. So it just depends on where we are at the moment of me taking the trade. But typically, I think it averages out to a 1-to-1 pretty much over the long term. A 1-to-1, but you know, I've been kind of, I had an 80% win rate. I think mine probably dropped down to probably like high 70s right now with these couple losses that I took. Top Step low-key showing promise for beginner traders. Be careful. They had some kind of, I've been seeing on X, a lot of people talking about, they changed the rule in their payout thing. So make sure you take a look at that before. There's some kind of rule they changed to get payouts, and they didn't really mention that, and people found it. And now people are kind of bashing them for that. So make sure you just understand that before you buy an account, if you do. Platform recommendations. I mean, A lot of people use TradingView. I don't use it just because I never started to use it. I mean, I use NinjaTrader, so NinjaTrader works good for me, and there's no reason for me to change it. So I'm a very, like, you know, maybe if you need like more indicators or stuff like that, you could use TradingView. I'm a very price action based trader. I don't need crazy amounts of indicators. I just need a chart. So, but yeah, the two popular ones, people use TradingView, people use NinjaTrader. So, but me personally, I use NinjaTrader. Unk run the route. Yeah, there's really nothing for me to. What a amazing rejection off this 5 minute. Oh, somebody asked, any good Black Friday deals? There are some. I mean, Apex having their 80% off. Take Profit Trader. They have 30% off, but they had some kind of. Let me see. Take Profit Trader, get 30% off for life plus no activation fees. 100% initial test refund. So, there's that. I'm not sure with any other. I'm sure there's other ones too. But pop firms are starting to roll out like Black Friday deals and stuff like that. Some other questions. How should I start as a beginner if I think this is something I want to do? Start putting money. I would say just start being obsessed with trading. Start being obsessed with learning and understand that trading is a very difficult thing to do. Don't let people like trick you into thinking that this is easy because you see all these P&Ls being posted. To be an actual successful trader long term and grow your account year after year, it's difficult. It's not easy. So trading is by no means easy, but is it possible? Of course it's possible. And it's kind of a thing where I tell people, like, you gotta be obsessed with trading to become good at it. Just like anything in life, to become super good at something, you have to become obsessed with it. And obsessed with it, but you have to be careful. Don't understand that when you're learning, you're going to lose money. So make sure you want to lose the least amount of money as possible. So the ideal thing to do would be just sim trade. Don't invest any type of money in anywhere. No courses, no nothing. Don't invest money. Get a simulated account where you don't have to put any money in, and just become obsessed with learning it on YouTube. Find videos and try different strategies, and then try to find a strategy that you understand that works for you, that somebody's back tested and it's profitable, and just stick to that strategy. And then as you stick to that strategy, right, and you forward test it, then you can kind of start to tweak the strategy for yourself, But that's pretty much it. And then just stick to that strategy. If something's been proven profitable, then you just need to stick to it. The discipline of sticking to it. And sometimes the thing is market shifts, and maybe you need to make some adjustments to that strategy, but you need to be a very data-driven person. Like, be a data-driven person, have exactly where you enter, where you exit, know your setup, and just stick to it. Don't be the person that's just randomly buying at certain areas, and you have to make sure you're learning from your mistakes. I've been doing this 3 years, and I still, I journal every trade, where, especially my losses. My wins, I don't really journal because I follow my rules. So if I win, I win. It is what it is. But if I take a loss, I'm journaling that loss. Like, what happened? All right, we were below VWAP. This happened. There was a lot of bullishness. There was a lot of gaps to the downside. I was short. Like, I journal the trade so that when I come back in my losses, I can look at every loss and see if there's a correlation between the losses. If there's something I need to change, or it was just a loss according, I'm going to take losses statistically, so it could have just been a loss. Like, these past few losses that I took, they were all, the one loss was my mistake because I broke my rules. I took a loss. The second loss was, what happened? The first gap set itself up. I didn't take an entry on the first gap. If I would have took that entry, I would have made money. Because I waited for another gap, like a bigger gap to form, and it ended up failing. The second one failed. So That could have been a win too if I would have just taken the first. So I try to learn everything I can. So if that situation happens again, I know what to do. Are you using Tradeovate with Ninja or just Ninja? No, I'm just using Ninja Trader. I also have Thinkorswim back when I used to trade options, so I use that as my charting too. So I have a Thinkorswim chart. That's just because I already had it, so there's no reason for me to get something else if I already have a brokerage with, and I have everything set up. But I could technically trade just with Ninja Trader, but that's because I'm a very price action based trader. So you can give me a naked chart with no indicators, and I can trade that chart. Obviously, indicators help me out, but like technically, I don't need them. They're just extra benefits to me. Nvidia, I want to enter. I mean, you just have to look at the chart. I can't tell you when to enter the trade. That's like, I'm not a financial advisor. That's something you have to determine on your own. I mean, do your research and, never invest more than you're willing to lose. So always protect yourself. Don't be that person that's just going hardcore and thinking that they're just going to make a crazy amount of money in one trade. Don't do that. It's not going to happen. How did QQQ move up so fast in the market this year? Yeah, it's been pretty crazy. It's been a wild ride. Couldn't trade today yet. There hasn't been no sweeps these past 2 days before going my buy's direction. Yeah, that's when somebody tells me like that's a good sign. In my opinion, that's a green flag. That's a really good sign that you're becoming a good trader. If you can walk away, this used to be so hard for me to walk away and not take a trade. Now I can walk away without taking a trade without even it affecting me. Like I walk away, I don't think about it. I just keep going with my life. It doesn't affect me whatsoever if I walk away and not take a trade. Like it's a lot of trade. To be honest, with my strategy, it's like I don't get a setup every day. I understand that, So, but that's also a reason I can kind of go a little more, heavier on trades. I can risk more per trade because if I sometimes get 2 setups a week, I can risk a little bit more per trade versus the person that's, taking 2 trades every single day. So that's why I say you risk according to your strategy. You don't risk according to what people tell you. People that scalp, multiple times a day cannot risk as much as I do per trade. They have to size down way more. All right. Should I start off with swing trading as a beginner? I mean, that's something that you have to determine for you as a person, like your psychology. Some people just don't like swing trading. Some people they like shorter term trading. Me personally, I don't like swing trading. That I'm not going to say that won't change. Maybe down the road it could change, but as of now, I don't like holding trades. The reason I don't like swing trading is because I like my day trading, because if I come in on the charts in the morning, right? I have my strategy, I have my setup, I wait for my setup, I take the trade, I make money, or I get stopped out. I walk away, and when I walk away, I know I have no positions. I don't have to worry about Trump saying something, of some kind of tariff news coming out and tanking the market, and I'm sitting there like freaking out. Like when I walk away from my monitor, I'm flat on everything. So I don't have to worry about, I don't think about the market, I don't have to worry about the market. So if you do swing trade, it is easier because you're looking at higher time frames. So it is better for a lot of people, especially with their schedule. But you have to size accordingly. Here, give me a second. I'll be back. But yeah, what we were saying, there are people who are profitable day trading. There are people who are profitable swing trading, right? Swing trading, the upside is, right, you're allowing price to kind of work out. Like, you're not sitting there like stressing out, you know, because price is fluctuating. Your stop is right here and price is fluctuating so close to your stop, and you're like sitting here freaking out that you're going to get stopped out. You know, it's like, it's a lot less stressful, swing trading, and it works for a lot of people's schedules. So, but there are people who are profitable day trading and swing trading. You just have to pick what works best for you. But the thing about it is prop firms, you can't swing trade with prop firms. You have to have your positions closed by, like, you know, a certain time every single day. So keep that in mind. Most prop firms, I'm sure maybe there are prop firms out there you could swing trade. I don't know. Most prop firms don't allow you to. It's too volatile to enter, bro. Yeah, it is pretty volatile. Like, you see how every box is 10 points. We literally, like, look at this drop right here. This 1 minute candle alone was 10, 20, 30, 40, 50, 60, 70, 80. It was like 80, 85 points. Almost 100 point 1 minute candle. And this is why I like micros. So if I wanted to take for example, a short position, right? You have micros, and if I get a strategy, my stop has to be above the highs, right? I would, you know, maybe enter here, like this area right here. So then you would do 20, 30, 40, 60, 80, 100, 20, 40. So on one micro, that's a 140 point risk. So if you're wanting to risk 400, you just multiply 140 by whatever to get you that close to that 400 risk you're willing to take. But with a mini, right? With one mini, that's what? You know, that's like $1,400 risk with one mini. That's like crazy. And then if you have a super tight stop, look, you, like, the direction could be good, but because you didn't put your stop at the right area, you got stopped out. That's why, like, you have to put your stop at areas of invalidation. You can't just put your stop, you know, you enter here and then you put your stop right above here, because you're just going to get stopped out even though the direction was correct. I think minis are for people who already have, like, huge accounts. That's what I think. But unless you're somebody who has a strategy where you can, like, there are people who scalp for like 10-point moves. So, but that's crazy. I don't get how people do that. Like, theoretically, you would think, like, oh, a 10-point move, you should be able to, like, it's easy. Bro, it's way harder because price gets so volatile and fluctuative that you're like, unless you have a solid strategy that you've back tested. But if you're trying to catch 10-point moves at, like, random areas, then, I don't know, man. I don't. But it's been pretty volatile, you can see. It's been, you get rippers, dumps. You can see this 5-minute range, right? We broke out of this 5-minute range, came back up, retested the bottom of the 5-minute range as resistance to continue going down. So you have a lot of volume that enters in the first 5 minutes, right? So you have tons of, I wonder if I have a volume indicator. Let me see. Volume, there has to be some kind of volume. I just want to see how much volume was in that 5-minute range. PQRSTUV. Volume. All right, here it is. Volume oscillator. Holy crap, there's so many volume indicators. Volume zones. Probably volume zones, right? Volume zones. Yeah, let me do that. Okay. What happened? Nothing happened. I just want to see how much volume was in that volume profile. What's better, volume profile or volume zones? Volume zones, I think. What the hell? Why doesn't it let me? Oh. Alright, we got it. Let's see if it tells me something. Not really. I just don't know how to read it. What about volume profile? Hold on. Oh, you can't even see it. Never mind. You guys can't even see it. It's on the very left. Hold on. Give me a second. Alright, whatever. I'll have to mess with it. Alright, one more. Volume profile. Give me a second. Volume, counter, volume zones, volume up, down, volume profile. What the? Oh. I don't know. Y'all can't even... Can y'all see that? No, you can't. I don't know. I feel like... I mean, it may work for somebody, but I was just seeing if there's a lot of... Hold on. Yeah. Whatever. Let me delete that. All right, we're back. You inputs? No, I'm not in anything. The ORB, I like the 15-minute. Yeah, 15-minute works pretty good. I mean, 5-minute works good. It just depends. Like, think about it is like, with the ORB, you gotta back test because there's so many ways you could take it, and the difference of how you do it could be the difference of whether it's profitable or not. So it's like people trade them differently. Some people trade them profitably, some people trade them unprofitably. But I use the 5-minute. But my strategy is different. Like, I tried to find somebody that uses my strategy. Nobody uses my strategy. It's like I'm the only one who uses it. So it's like there is some similar strategies that they did backtesting on, similar to mine, that were good, that worked out good over long term, but it wasn't exactly mine. I wish I could do like extensive backtesting. I only have like 4 months of backtesting on this strategy, which is not enough, but it's, you know, profitable for 4 months. I think it sets a lot of traps. Like, look at this 5-minute. Look at this 5-minute opening range. Right? We broke through it. We came back, retested it as resistance, and then kind of started to push down. And then if you remember yesterday, look what happened yesterday when we entered that zone again. Let me scroll back to yesterday. Look what happened yesterday. Here's that 5-minute opening range, right? Look at that. We closed outside the 5-minute range, closed back inside, and we retraced that range pretty much to this support level down here. That was like, you know, 60% of that range was filled. So once it dropped back into the range, and then look, once it closed back outside the range, look at this. Displaced above, held the range as support. Held the range as support. Continued moving up. Look at the rest of the day. And then same thing kind of what happened with today. Same thing happened today. Look at that. Broke down, tested it as resistance. Now we're going. So... I was targeting the midpoint of that 5-minute range when longs were playing out. When longs, right now, these longs today, you gotta be careful with the 5-minute range, because understand that A lot of times, if you're in a long, if you're in a long below the 5-minute range, understand that a lot of times that 5-minute range could hold as resistance, right? So like today, right? Look at that. It came up and held it as resistance. And then you go back test on how many times that happens. Go back test the whole month and mark out the 5-minute high and 5-minute low, and then pay attention to when price breaks out of that range and displaces. When it comes back, how many times does it use it as support or resistance if it's below it? So then you kind of know in the future, see that kind of knowledge for your future. If you're taking a long and then you see that 5-minute range bottom, again, you're like, all right, it's a lot of times it's rejected off it. So let me take profits earlier so that I don't get caught in that rejection. So I can take profits and then it can reject. Because you want to just play probabilities. If there's a high probability that price could reject the bottom of that 5-minute range and hold it as resistance, then why would you want to risk holding the trade? Could it break through and keep going? Of course. But why would you, if the probability is against you, why would you want to hold it? Caught that open drop up 3,000 across all my accounts. Nice. Nice. That's dope. But also, you know, pay attention to higher time frames. If you're in a trade, scroll through higher time frames. Make sure there's nothing like what could be holding it up. Also, look at the higher time frame. Look at the 15-minute chart, right? When you look on the 15-minute chart, when we started to push back up, you're realizing not only is it the bottom of that 5-minute range right here, but look at this bounce right here. This is big support. I mean, big resistance right there. So this area right there could hold as a major resistance level when price comes back up. And that's exactly, price came back up and rejected that area because what I say time and time again, old support levels hold as new resistance levels, especially on a higher time frame. They hold more weight on a higher time frame. This is the 15-minute chart. So you're pushing up into a resistance level. So also look at the hourly chart. Let's see what's going on in the hourly chart, right? You can kind of see on an hourly chart, right? There is resistance right there too on an hourly time frame. So plus you've got the 200 on the hourly chart. So there's so many things that could, there's so many reasons why price could reject where it did. So the more reasons there is, the more likelihood it's going to reject there. So you want to be a very that's how I am. I'm a very defensive trader. Like I go based off, you know, probabilities. If I'm in a trade, where is the highest likelihood probability that price could go from my entry point? Typically it's a 1-to-1. If I can catch a 1-to-1 with a high probability, why not? Why for me try to guess and hold for a 1-to-2, 1-to-3, 1-to-4? The higher I hold targets, the less probability it's going to get there. So if I can take a high probability setup on a 1-to-1, I'm taking that all day. I don't see a reason to try to target these 1-to-2s like people think. People make it seem like, you know, you need to be catching these crazy moves. You really don't. Base hits add up. Just like small losses will add up, these base hits, high probability setups do add up over time. They will grow your account over time. And especially if you have proper risk management, so where you're sizing down on losing streaks, you're playing defense when you're on a losing streak, you know, knowing when to size back up. And then when you're on a winning streak, you're making more money, even though you're a 1-to-1 because you're sizing. You have some very strict sizing rules. So, all right. Also, the MAs, if you have them turned on, you'll see a lot of the time they act as levels of support and resistance. Yeah, a lot of moving averages, like this, that gold line you see on my chart, that's an EMA. That's a 200 EMA. So moving averages, exponential moving averages, all those, I mean, all of them work, but they're not indicators to, like I said, they're used as gauges. Hypothetically, also in a long, right? If you're in a long, right? If I was hypothetically in a long position down here, I understand, first of all, like I said earlier, looking on higher time frames, I understand up here, there's resistance up here, even on higher time frames. We do also have the bottom of that 5-minute range. We do also, we're coming into this 200, EMA. Look what happened here. Rejected off the 200. Look what happened here. Support off the 200, right? You see this time and time again. It's not that it has to, but you see rejection. Like it does, hold a lot of times. So is it worth the probability to try to hold your long through that? Like, why not just take profits or take at least most of your profits, or understanding that it could reject there. And you're thinking in probabilities, there's probably a higher chance that it rejects there than a chance that it rips through it and keeps going. So if there's a higher probability of something happening, why not take profits there? Especially if you've already caught like a 1-to-1 or... Like if somebody tells me there's a high probability price could reject right here, well, I'm probably going to take profits then. Especially me being a base hit trader. Like, I'm probably going to take profits. If I go skydiving and somebody says there's a high probability your parachute's not going to open, I'm not freaking jumping out of that plane. It's the same thing. If I'm in a trade and there's a high probability of price rejecting in a certain area, I'm taking profits. I'm not trying to go through... trying to be a hero and try to catch some insane move just so I can brag. Facts, I'm working on better entries by using fibs. Yeah, a lot of people use fibs. That's the crazy part also about trading. You can have one strategy and then you can have hundreds of different ways of trading that one strategy. Some people trade it this way with this tweak on it. They use a gap. Some people use this, and some people use a fib, and some people use this. And like those extra confluences could, tweak your trading. Like it's crazy. The smallest little change in your strategy can tweak your win rate. That's why I keep track of my data. So that if I need to make any kind of tweaks, I understand. I'm not just, trading blindly. As long as you try to learn from your mistakes, try to improve. I mean, it's a continual process. I think you never get to a point in trading where you're just like, well, I'm good. I never need to, I have this strategy. I never need to improve. I'm just going to kind of coast. Like, even though you may have a profitable strategy, there may be times where you may need to tweak it. You may need to tweak that strategy because certain market conditions may force you to make some minor adjustments to your strategy for those market conditions. Like my entries now may not work as good maybe, 3 months from now in a different market condition or in a different, So I have to make sure I'm keeping track of my data, and if I need to tweak something, I'll tweak it. I'll go back. If I take, say, 3 losses in a row, take a step back, look back at my data and see, do I need to change anything? Or it's just, I need to just continue moving on, maybe sizing down to protect myself. Was I the only one disappointed with CPI this morning? It didn't do much, did it? 8:30. Yeah, what the hell? Bro, that is honestly a pretty crazy CPI. It literally did nothing. That's wild. Yeah, I've never really, never seen that before. Usually CPI is wild. You get some insane moves on CPI. Today it was like nothing. That sucks, because if somebody woke up... I don't trade high impact news like that, but if you woke up early and saw that just to not take a trade, it could push people on tilt. So like, look, we're coming into an area where we're at VWAP. We're at the 200. There's a high probability we could have some form of rejection here, like a decent sized rejection, maybe back down here before possibly trying to push through it again, or we reject hard all the way back to the bottom. But we're coming into an area of high resistance. So as of right now, there's a higher probability we reject here than push through it, as of right now. So just understand those types of things. Like, oh man, what a day. I figured today's probably gonna be. We're just tapping view op right now. Holding this top bottom of this range as resistance. And you kind of see how much struggle it's having getting through it, right? There's a reason price is struggling right there. And a lot of hedge funds too. There are hedge funds that use VWAP. VWAP is coded in. That's why VWAP works also so well. Is because VWAP is like something that hedge funds even use. So everyone uses it. So that's why it works so well. It's going to range between that fair value gap and the EMA, but I think it'll drop back down. Yeah, it's interesting. I mean, like I said, there's a higher probability of it dropping than going up as of now. This is like... And there you go. Look at that rejection. Like, was this a shocker that this thing rejected right there? It's not like... You're not sitting here like shocked. I literally said there's a higher probability it could reject right there. You know... Now it's kind of filling in these gaps. Now we're entering an area of support. These candle wicks here could be, you know, some level of support. So we may get some buying pressure that starts to step in right here. So it's like... There's like maybe some buying pressure steps in right here. Tries to push it up. Maybe it rejects again off this wick here. You think SPY breaks 670 today? 670? Oh, so like the bottoms? So right now it's kind of in a weird area. We are making, understand price action right now. All right, we did make a low. We made a higher low. Another higher low. So we're kind of coming into this area of almost like a bearish, you know, almost like a bear flag type of deal going on. So it's tough to say. We are still below. I think as long as we hold below this VWAP area here, as long as we don't start displacing to the upside, going, you know, pushing above VWAP, above this 5-minute range, that's when it starts to look ugly. I think as long as we stay below this area, we're looking good to potentially, it could maybe, you know, drop lower. But as of right now, we're overall sentiment is pretty bearish. So, like I said, there's a higher likelihood of this thing going down than going up until it gets past, you know, this high up here. And this is just my opinion. Until we get past VWAP above this range, Then it starts to go, all right, now we're above. Now we can push back into VWAP to hold it as support to continue going up. But as of now, we're holding VWAP as resistance. So we're showing a lot of bearishness. Man, I'm like calling, look at that. I literally said we could get that drop, then we can get a bounce off of here to hold this as support before trying to go up. Now we popped up here. Now the question is, do we hold this as resistance or, you know, there's several things that can happen. We can hold this as resistance, drop back down. We can take out these highs, drop back down, take out the highs, displace the highs, hold the highs as support to continue going up. There's like so many things that could happen. But as of now, yeah, we're still below VWAP. We're still below, so we're still in bearish territory. Once we get above VWAP and displacing, more algos start hopping in to longs because we're above VWAP. That's why when we get above VWAP, it starts displacing, pushes back down, typically tries to hold it as support. So, but have your areas of invalidation, right? Understand that if price does, and you want to, this is like, no trader knows exactly what's going to happen. Like, I don't know. Like, obviously, I said, oh, there's a high likelihood it could reject right there, but I had no idea. For all I knew, it could push through it, right? So, you never know with anything. So, you always want to protect yourself. And, like, if you're in a short, have an area of invalidation that if price pushes above, you know, maybe this high up here, price pushes above that high, you don't even want to be in that trade anymore. Like, why would you even want to be in there if it pushes that high? It pushes above VWAP, starts displacing to the upside. So, have your area where you're like, if it pushes above this, I don't even want to be in the trade anymore. That's where you should put your stop loss. So, where you're like, if it goes there, I don't want to be in the trade anymore, it's fine. It's in consolidation right now. Yeah, I mean, and here's the overall sentiment, like on a lower time frame sentiment. Anytime we're below VWAP, we're in bearish territory. Anytime we're above VWAP, we're in bullish territory. So that's like something I even take in account with my trading. If I get a setup below VWAP, a long setup below VWAP, I understand I'm in bearish territory. So I got to be careful where my take profit is. I can't be greedy. I can't be greedy, especially going against, you know, the overall daily sentiment. So I may take profits earlier than if, you know, longing above VWAP, I may be more confident to hold for, you know, maybe the full range versus wherever that next TP is. I may be more confident to hold to a higher target than if I was longing below VWAP. I mean, see how many times it's rejecting. We're just kind of going sideways as of now. But $15-minute bearish. Was there a big gap up there? Yeah, this is why it's good to always go on higher time frames and understand. Yeah, tapped a gap up there. So you see that gap up there. Right? We literally just tapped into the beginning of that gap and rejected off it. So that's why it's good to, you know, go to higher time frames. Understand where price could reject, where price could hold as support, where price, and this is just watching. A lot of support, right? A lot of resistance in this area. Bottom of the 5-minute range. This major level could hold as support. You have a gap up there that's also a bearish gap that can hold as resistance. I mean, resistance, not support. Resistance. So you have so much things going on right there that can hold as resistance. So that's why you're having that struggle. But if you're just kind of zoomed in on a 1 minute and you're just looking at a 1 minute chart, you have no idea what's going on higher time frames and what, you know, why we're rejecting here, why we're so. And that's kind of the benefit, right? You watching the same thing every single day, watching NASDAQ, trading NASDAQ every single day, you begin to understand how it moves. And, oh, all right, I'm in this trade. All right, we have room till this area. That's why you hear a lot of traders go, we have room till this. We have room till this. Because typically when you buy, you have room to a certain price of highest probability rejection. So if I'm in a long, I understand that there's a high up there. We have room to the high. And then after the high, it could either displace above the high or sweep the high and come down. So that's why, like, me personally, I love the setups where I get into a trade and there's nothing holding price from going straight to my TP. Like, you know, sometimes price action, like you'll have old support levels that can hold as resistance levels if you're trying to long. So you're having all these resistance levels that price has to kind of get through. So you get into this long and it starts kind of chopping like a little bit sideways because there's so much resistance before it hits your TP. And then there are those other trades where I take it, there's no resistance to my TP. I enter and price just shoots right directly up to my TP without going sideways or whatever. And the more resistance, if you're in a long, the more areas price has to get through, right? Typically the lower probability you're taking, because there's more areas price has to get through. There's more times price could reject off of those areas. So it becomes a lower probability than if you're entering and it's pretty much a direct shot to your TP without any resistance. Bro. Or is that I'm talking too much? How am I talking too much? What do you want me to sit there and freaking smile at the camera? What do you want me to do? Answer my question. What question? How can you make money when Nvidia is up or down when you're sleeping? I don't know. How am I supposed to know that? If it was that easy, if I could just tell you some kind of secret formula, I wish I could, but I can't. I can't give financial advice or I will get in trouble. Are you trying to get me in trouble? Are you trying to get me to give some financial advice? I can't do it. This is not financial advice. Become obsessed with learning, figure out a way, and then apply. Like, trading is all data driven. If you want to figure out if something works, all you have to do is back test it. You back test it and see if it works. If it works, forward test it. That's like as simple as it is. Okay, then why are you talking about support? I'm talking about day trading. I'm talking about lower time frame support and resistance, like in terms of day trading, not in terms of investing. In terms of me scalping, I'm a scalper. I take, I'm a scalper. So I look at higher time frames, resistances, support levels. Then I go on a lower time frame if there's any support resistance levels, depending on where I'm taking the trade. Wherever I'm talking about, I'm talking in terms of not investing, swing trading long term. I'm talking about scalping, day trading. Markets being run by news. I mean, kind of, yeah, but for me it doesn't matter. I don't care about the news. I don't care about market sentiment. I don't care about any of that. I just trade price action. Whatever the price action shows me, I have a specific setup. I have a specific criteria. I look for it. If it happens, I take the trade. If it doesn't happen, I walk away. It's simple as that. I don't care what Trump says, as long as he doesn't say something stupid. As long as he doesn't say something wild while I'm in a trade. But that's what I have a stop loss for. So, Trump can say anything during at any point. So, But once I'm out of the trade, I don't care what he says. You know, he can say whatever he wants. All right, now we're getting to an area. We're pushing back into that range. A little bit of if you're in a long, a little bit of be careful. Right, we kind of pushed into an area now. You know, we could kind of retrace. Maybe I'll take a little for fun. No? Should I? Kind of tapping into... Actually, never mind. I'm not going to do that. I just realized it tapped that. I'm not going to do that. I had an order in there. I had an order in there just for a very small order size to try this. But then I realized it tapped those highs. It tapped the body candle highs. And, right? A couple losses ago, same crap happened. Where it tapped the body candle highs. And I still had my order there, and I ended up getting stopped out. So look at that. Good thing I canceled that order. It was a very light size, but still, light size or not, I don't want to give away any money that I don't have to. Once it taps these body candle highs, at least of this kind of area, that's it. I'm out, because there's a high likelihood. There is a likelihood we could drop for those lows. So. But I didn't realize that until after I put my order in. See that? This is the importance of keeping track of your data. This was literally like what? In the beginning of the month, I took a similar trade. It was a loss in the beginning of the month. Same scenario happened where we kind of tapped in, or we actually swept like an internal liquidity, and then came back in and ended up stopping me out because I still had my order in there. Once it hits a level of where I would have taken profit, like once this gap got set in, if there's a pullback, technically I would have taken profit at the body candle highs. Once it reaches an area where I would have taken profit, my order has to get canceled. Right, and there's that low. So, well, all right, y'all. Kind of a meh day. Not the best day. I was hoping for some better price action for me, but so flat on the day. Didn't take any trades. Walking away. Oh, crap. Today's Tuesday. Well, we have one more day, right? Markets are closed. Thursday markets are closed, so... Ah, bro. Markets are closed Thursday, so we got pretty much... What? Today, tomorrow, and then Friday. I think markets open on Friday, so... Did you trade this week? Yeah, I did take a trade. I took a loss yesterday. Took a loss yesterday, but it was my fault. It should have been a win. Pretty much what happened yesterday was I got my setup. There was a small gap that got formed at the top of the range. Small gap that got formed. I didn't take the entry off that small gap. I was like, I'm gonna wait for a bigger gap to form. If I would have took an entry on the first gap, like my rules state that you need to enter off the first, like if I would have just followed my rules, it would have been a winning trade. But the fact that I just ignored it and then waited, you know, I ended up losing the trade, which should have been a winning trade technically. But it is what it is. I mean, you live and you learn from your mistakes, so it's all right. Nothing, no big deal. We keep it going. But that being said, I'm gonna hop off. It's almost 11 o'clock. I'm gonna head out. So if you're gonna keep trading, be careful. Please don't go until, don't blow up your accounts. Like have specific rules for yourself, cutoffs, you know, daily loss limits, whatever it is. Have specific rules for yourself to prevent yourself from overtrading. It's you know, if in my opinion, all you need is one good high probability setup that you look for. That's it. You don't need to be taking, you know, 5-10 trades a day. Look for one good high probability setup and that's it. Stop trying to trade every single move up and down. Figure out a strategy, back test it, figure out the profitability. If it's profitable, forward test it, and keep it moving. 1,000 day today after losing 1.5K, we back in business. Nice, 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 nice. Yeah, keep it going. Don't make sure if you take a loss, be fine with taking a loss. Don't go until, don't understand that it's fine to take losses. But what's not fine is if you go on tilt, you break your rules, you go into crazy drawdown. You never want to get to a point where it takes you weeks to make back losses, right? You never want to get to a point where you're sitting there trading after day. You've worked so hard, 2 weeks being disciplined, and then one day you give away everything. Don't be that person. I've been in that position before. Cut your losses. Understand that you can make it back. Market opens up tomorrow. Market's going to be opened up. So it's like there's no reason to force anything. There's no reason to. This is a long-term game. If you want to be successful in this, you need to develop patience. If you can't be patient and follow your rules, then you're just going to be somebody trying to chase profitability for the rest of his life, never being profitable. So do what the 90% don't do. If there's an industry with a 90% failure rate, figure out what the 90% are doing and don't do that. Do the complete opposite of what they're doing. What are the 90% doing? They have no rules. So have rules for yourself. What are the 90% doing? They're just buying at random areas. They're going on tilt. So stop buying at random areas. Stop going on tilt. You literally need to do the opposite of everyone. And so, all right, I'm out. I'm just gonna go on something else, and I'm gonna just keep talking for another. So peace out. I'll see you guys tomorrow. I'll be back 9:30. Hopefully we get some good. Hopefully I get a setup tomorrow before Thanksgiving. If not, it is what it is. But I'll be back tomorrow. Peace out.